Good afternoon. Happy Friday, January 17th. Mark Milam here, your mortgage professional. Let's get right to it. Pretty tumultuous week in the world of mortgage rates, although we're going to kind of finish up where we started. But boy, it was a long road to get here. We saw mortgage-backed securities sell off. Mortgage rates went up at the start of the week. And then on the middle of the week, we got the consumer price index. Came in a little cooler than expected, especially when you get to core inflation. Core inflation appreciating at the lowest increase month over month that we've seen in the past 4 years. We will take that all day long. We saw mortgage-backed securities rally. Interest rates came back down. And like I said, we're finishing out the week kind of where we started it. I do want to call your attention to an article that I found on NPR as I was reading about housing news, and this article talking about the trajectory of interest rates and housing in general. And the chief economist for Freddie Mac, Sam Khater, was quoted here about interest rates saying they should decline some as we move through the year. No real basis for that comment. Just says should decline some, but I think the new normal for rates is 6 to 7% in this world of strong economic growth and steady inflation. If you scroll down the article further, the MBA is quoted as saying mortgage applications to buy a home are starting to decline from a year ago due to the high interest rates. But Khater, again, the chief economist for Freddie Mac, comes back and says he expects the housing market will be fine. And why does he say the housing market will be fine? Well, home prices and the real estate market will be able to withstand the higher rate environment because, quote, the economy is strong. As if the strength of the economy, ever since the pandemic ended, has resulted in a housing market that hasn't been in a significant recession for the past 2+ years. Why, moving into 2025, would a strong economy bode well for housing when it hasn't bode well for housing over the past 24 months? It's a frustrating comment. I just want to point out a couple of things around that. So here's an article today from Housing Wire talking about rising mortgage rates zap home builder confidence. Home builders confidence index dropped from 66 to 60. That's a very pessimistic reading. That's all about rising mortgage rates. Certainly not about a strong economy there. It's about affordability. Speaking of affordability, here's the Atlanta Fed's affordability index ticking in at 71. Listen, it takes a reading of 100 for a median income family to afford a median priced home. We're down here at 71, near some of the lowest levels of all time. This has nothing to do with a strong economy, Mr. Khater. This has everything to do with affordability. Speaking of affordability, let's talk about credit reports. Credit reports going up another 20% in 2025, frustrating mortgage execs because guess what? They went up about 50% in 2024 as the cost to originate a loan from Freddie Mac's own reporting. Now, this is a report from Freddie Mac telling us that the cost to originate a mortgage as of 2023 is now $11,600 per mortgage manufactured. This is because of the rising vendor costs that are killing lenders, and lenders are being forced to pass on this exorbitant cost to clients, and that is impacting their ability to afford. And as we close out 2024, we saw one of the slowest existing home sales markets in 30 years. Existing home sales per Fannie Mae had dropped to 1995 levels as we closed out 2024. And yet we have the chief economist for Freddie Mac telling us that he thinks the housing market will be just fine. Why? Because the economy is strong. Guys, what we need are leaders with innovative solutions. We need leaders that are not afraid to be honest, that are not afraid to talk about the unique problems that face housing today. Problems like we haven't witnessed in the 20 years that I've been in this industry. Frustrating to read that from one of the GSEs and from the chief economist of Freddie Mac. If I can be of any service to you over the holiday weekend, don't hesitate to reach out, mark.milam@highlandmtg.com.